2nd of February, 9:45 a.m. And as you can see, because of the Facebook, Amazon, Apple, etc., the tech stocks shooting up. The Nasdaq, the Dow Jones, S&P, everything was 1.5% up, and that has resulted into a fall in India VIX. And now Nifty is also 1% up, and Nifty futures 1.5% approximately up. So I think the market will stagnate over here, but at the same time, I think we can go ahead and increase some of our risk over here. We can just like sell a put maybe at 20,000. We can increase just one put. It was one small put, and I'll just go ahead and add it. So that's it. I modified this and I tried to sell it at 43.2, and let's see. Yes, it got sold, and we have just increased 161.4161, and we increase this. That's it. Okay, the effective VIX will come down slightly. That's it. So that are the adjustments for today. And if the market goes bullish, further bullish, we'll do more adjustment with a different kind of call ratio adjustment. For now, let's wait here. Okay, so we are same on 2nd of Feb. Okay, 11:15 a.m. and the market is going up now. You can open it up. Okay, the market is reaching 22,000. What we can do is basically start with a call strategy, call ratio here. So we go ahead here, and what we do is basically we duplicate this and duplicate the tab. Now what we do is portfolio, we go to strategy builder and straight away build a strategy in options. 22,500 CE is something that we will buy. Now this has been bought. Now we have to go ahead and sell something else, that is 23,500 CE. We go ahead and sell this, and we have to sell this 2 lots at least. Okay, it's still not profitable. We have to sell 3 lots. Yes, now this is in profit, so we have to sell 3 lots of 23,500. Okay, we have to change this to 3 lots over here, 4 lots over here, and yes, we have to change this to 5 lots. The margin consumption is quite high over here. The market is going upwards. Here we will have some profit. The margin consumption is quite high, 22,500. Here we have to figure out how to react to this situation, basically by going much upper. Let's just add the positions and check how the situation changes. 22,500, this is the CE. We've gone ahead and bought it, and 23,500 is the CE, where we go ahead and sell the 5 lots of it. And look at how the market is changing. Okay, the break even has gone to 23,425, and the current break even was at 23,000. I think at the lower end we have lots and lots of potential for break even. What we'll do, we'll basically exit the PE side, okay, completely, because this will not give us any value add over here. What we'll do, we'll go ahead and exit this, and we have already exited. Now we come back here and we probably add another lot of thing 40 point okay 40.1. let's check out 45. We can actually sell it at 40 only. Now let's go ahead. Market is not getting exited at 40. 39.9 is the 39.9. we seal the deal. Yes. Now let's check out the positions. Here we are, the bot 21,000 PE is exited. Okay, here we are at 59, approximately 60. Okay, 12 lots, let's make it 60. Modify, and the bot PE is completely exited with a loss. Booking there, yes. So this is how the strategy looks like. Just see how the market is going up. Just look at this space, and upper break even is somewhere around 23,362. Yes, we will face the resistance at all time high, but if that all time high is taken out, then it will go very fast upwards. I'm not sure how situations will turn out in February, but for now, let us adjust it at day end only, not now. So we'll wait for day end, or probably we'll go ahead and start selling like 24,000 CE or something like that. But let's wait for some time. It's 9:59 a.m. and you can see market is quite positive. So because of this positivity, we'll just move ahead to 20,500 PE. And if we check the March, okay, here is a 20,500. I clear this off, and what I'll do, I'll exit these two lots over here. 100 is exited, so we'll exit this at 42.5, and we go ahead and buy, and we have to sell this. So let's modify 42.55, and let's try to modify it 42.6. Try to modify it 0.7, and I think it should get triggered. Oh, this is not getting triggered. Let me just modify at 0.8, and let's observe it's not getting triggered. We'll have to do it 42.95 only. Modify and keep it 43. Okay, it is executed. Now we go ahead and sell 100 quantity. Here we sell it. Okay, modify, no problem. 72.4. It is executed. Now let's just check out the position, and it is 72.4. We have sold this, so here we go. We sell it at 72.4. Modify this. Okay, this is an extra. We delete this. I've already reduced this to 10 lots, and I go ahead and save strategy. So the strategy would be 15. I'll be at 15. So this is 15.2 maybe, because market is high. We save this.
Hey
Okay.
Mansi, hi Salman, good morning. I was on a call with you.
So that's it. Thank you everyone. Bye. 8th of February, and now we are sitting at 1:21 p.m. Early in the morning, I had to make some adjustments, and I could not record it, but yes, I'll explain the adjustments. So this is 8th of February, Thursday. Because of the expiry related issue, the market actually started falling, and now it is looking like stable, but I think it might fall back again. I'll let you know the adjustments. So early in the morning, we actually started selling the 20,500 PE, okay, and then we booked the complete 500 lots of 20,000 PE that we had sold. So this is the strategy. Okay, here we had 20,000 sold, which we completely booked it, and we bought it back. Now what we did, we tried to shift this 500 lots to 20,200. So we could do it in two steps, and then again, because of the margin shortfall, I had to book a single quantity of 20,500 PE in loss. So that's what I booked. So here is the current position. So we have 150 quantity of 20,500 PE, 2,200 quantity PE, we have 500 quantity, and then the call ratio spread of 23,000 and 22,000. So you can see the call ratio spread. The bought call of 22,000 is still in profit. So that's because, again, this is because of the March issue. The sold call is still in loss. The loss is more than the profit. That is also because of the quantity. The quantity is 5 times higher, and this is the current way the strategy looks like. Okay, so you see the peak of the strategy is still within the 1 sigma, and my peak is
out of 1 sigma. So this strategy is still looking like something that is balanced, quite balanced, because the loss entity starts quite soon. 20,200 is very safe space, and 23,353 may not look like a safe space if the market turns bullish, but because it is sideways, it is okay, it is decent. What we'll do, we'll try to somehow extract like 20,000 per month and try to recover our losses. So that is the plan. So that's it for this video. Thank you so much. See you again, friends, and options trading with Salman. So today is Tuesday. This is 13th of February. We are sitting at 9:59 a.m. So almost 10 a.m. Here early in the morning, I had to take a couple of trades. So basically, I had to buy this 23,000 CE. So I had this 500 lots of 23,000 CE, and because it was looking in profit, so I went ahead and bought it. And I was almost going to reach the break even in this bought 22,000 CE. So I thought, let's just exit it. And after exiting, this is what my current graph looks like. So that was a well planned decision. Here you can see the peak the start of the downfall is beyond the 1 sigma movement, and here it is just within 1 sigma movement. But yes, the lower break even is downwards because we will split the PE into two parts. What we can do here is, when the PE gets profitable, 20,500 PE we can reduce further. Okay, and then probably we can build more on the CE once CE goes in loss. The interesting fact here is that the India VIX is rising quite a lot. So despite the market being almost like flattish only, the India VIX has rose too much. So this will keep on happening till March, and let's see how we adjust this position. So that's it for now. Thank you.
So here is the market today. We opened a gap down and then the market showed a positive signs and we could break the yesterday's high. So this is the 5-minute chart, and the 5-minute chart is quite positive. Here we can go ahead and check out the candle. So this is the unusual candle. Now we have like approximately 45 minutes or 1 hour of trading left. So this is 2:36 p.m. and this is Wednesday 14th of Feb. So Valentine's Day. Happy Valentine's Day. Here you can see that from this region to this region, the market has not gone anywhere. It's just consolidated. Okay. So this is the long consolidation, and wherever the market goes, the move will be strong move. I believe the market will go downwards only, and that will be a strong move till 20,000. If it breaks this line, basically 21,000 line, okay, 21,200 line. So upper end. Now let's come downwards here. 23,000 we have kept our upper end, okay, and we have kept our lower end at 20,500, 20,200 odd levels. Now what is the adjustment what we can do? Let's look at the strategy. Here is the strategy, okay, and 23,000 levels. Here is something is showing in positive, and here there is positivity. So for that positivity all around here, in order to maximize the returns, what we can do is like go ahead and start selling the 23,200 C. See this 174 23,200 CE we can sell. So if we reduce this and exit, we can probably exit this 100 lots. So I had exit this at 100 lots and I bought it. So here let's check out the margins. Okay, margins are decent. Now let's see if I can get 23,200 at 150 quantity, and if I sell it, yes, now the margins are 35,000, so that is decent margins. And let's go for 3 quantity at 61. The India VIX is 15.4. Yes, so that is the reason. I think we did not bother this too much. Maybe we can do something like this and just readjust this. 20,200 we have to reduce to 8 lots and save this again. So you can see there is a slight increment in this break even. So what we can do, we can actually increase the break even from positive side if required. But I still feel that going up from here is quite difficult because we have the election season, and people would tend to reduce their risk. What happens if BJP loses, or there is a contested election, there is a mixed election, there is not a majority vote, so it can happen that there may be some kind of losses, and the market may come down and then take some stable support at around 20,000 levels. So upper end is like a little bit of impossible for, looks like less probable, not impossible, less probable for March end. So what we'll do, we'll probably take this risk, and what we can do is we can reduce this. Maybe we can make it this 150 lots, and make this 400 lots. So that's what we can do here. 250 we can book 250 over here. If we want, we can do that. And what we do if we exit this and book 250, but I still feel that's fine. Should let this be, because the market will come down tomorrow, maybe day after tomorrow. So it might come down. I'm not sure because this looks like a consolidation phase only. So today it went up like this, tomorrow it will come down like this. So it will again consolidate. So no need of adjusting too much drastically. We'll do it on need basis, as and when the need arises. We will do it. Not really needed now. What we can do is we can actually increase the, what adjustment we can do. We can make the similar kind of adjustments over here. Probably we can be a little more aggressive from this side, the lower end. Okay, and try to bring it to 20,500. Make this lower end 150 and this upper end 20,500, and that's how we can probably think of balancing it. But again, so this margins and room for error is quite less, and if markets can fluctuate backward also, it can give a backswing as well. So going to 20,500 looks little risky. So if I go to 20,500, it becomes risky, and here upper is 23,000. So let's wait and watch. So this is a strategy for now. We have saved this strategy already and just reload it, and here it is. The probability profit is 82%. So let's just be there and wait and watch. Thank you. 15th of February, Thursday. So today is the Nifty expiry. We are at sitting at 12:01 p.m. And despite being Nifty expiry, the market is quite silent. Yesterday, everything was quite positive in the US markets, and that's why our market is quite positive. This looks like a muted expiry. Let's look at our positions and decide the path forward. Currently, what we can see over here is that our margins are quite less, and if the market moves upwards, and we'll face some losses. What we can do, we can reduce one lower risk position in the bottom end. Okay, here we can go ahead and just directly give an exit. Okay, and here we buy. Yes, exited here. We get a 25,000 margin benefit, and that is decent enough. What we can do, we can start selling this 23,200 also now, and if we go ahead and add this, the margin is insufficient. So for now, what we did is basically just reduce the risk from the lower end. So here we just reduce this one, okay, in order to give us some margin benefit. That's it, and we could do nothing much. What we can do is we can take this completely forward, 20,200 level completely to 20,500. But at present we will not do that because we're still in the center zone, and the market can come down anytime. When the market comes down, it comes down very fast. So because the logic is same, you need some money to push the market upward. You need to have the cash balance, but for putting the market downward, you can just sell because you have everything. If you sell heavily in cash market and buy lots of put options, the markets are bound to go down, and that's how the FIs, DIs, and all the investors earn.
So that's it for now, and let's observe how the market travels and then decide. For now, if you want, we can check the interim PNL, and if we go to reports and we go to reports PNL, we check the 2024 and we check our progress in February and 15 days progress. Here is the 15-day report card. So that is just around 5,000 rupees. So that is nothing great, nothing much, and we should incur some more profits at later end. Let's check out the Greeks. Greeks are 5,000. So Greek is decent. We should incur some profits, on a daily level here. I'm not sure why it's showing some losses, but yes, here the market should, the India VIX should crash over the weekend and probably things should stabilize. For now, let's check out the value 61, and we have 20,200 is 43, okay, 44, 68, 20,500 is at 68. Let's make it 68, 45, and we have 61 and 95, 61 and 95. So that's fine. The levels are fine. It's completely sell strategy. So that's it for now in this adjustments. We'll wait for checking out the market dynamics and decide the path forward. Thank you. Guys, welcome back. So here we are sitting on Thursday, 15th of Feb, 1:47 p.m. And we can see even the second half, the market first gave a upshot over here, and then it gave a upshot over here, and this looks like kind of a block deal, and this will be very heartening if the same kind of two big red candles come later at the end of the day. So I am just afraid of that, but as far as now we can see the market is moving upwards, and from downward actually we can reduce this item and bring it upward. So what we can do is probably we can exit this at 50 items, okay? Exit this at 33.75 and modify and exit this at 33.8. Executed. Now what we'll go ahead and sell this. We'll add, okay, we'll add 50 easily sold. Margins are 16,000. At 64 and 43. So here we have PE. This is reduced one more lot and we go for 43, and here we go for 64 PE. 45. Yes, so we save the strategy again. The India VIX is quite same, and when the VIX increases and the market goes down, we will still have some kind of support. So that is what we did. Right now what we can do is basically shift everything to 9,500, but that will reduce our margins very drastically. We won't have anything left in the margin section, so it's better we come up slowly. Still we have at 22,000 and we have 1 month to go for 23,000, and there will be many lots of turbulence, due to which we won't see this going straight away like this. And 22,200 seems little bit like not so much possible kind of a journey right now. We have the first blocker of 22,500 is the kind of a blocker. If we see this chart, okay, here is the nearest all-time high. If I see this all-time high, this is the nearest all-time high. One time it went here, second time it went here. I think third time again it will go here, come down. When this thing comes down, this will come down really very badly. Probably it will come down till March, end March. I think it will go down till 20,500, 20,000 levels. So that is quite a possibility. You just have to wait and watch. Let's check the scale. We check the scale, the rise. Okay. The rise from 20,000 to
21,000. Like it happened over, like, suppose just around 8 bars. So if you see, once it goes to 20,000, it will take like 16 bars to come down to 20,000. So here, and if we take 16 bars will be here, and so it will be 11 bars. So it will take around 11 bars if the market starts falling to come down to around 20,000 levels. So that's fine. So that's what it looks like. So as far as the adjustment goes, I don't think we need to adjust too much over here. What we need to do basically, have some patience, observe how the market goes, and then react probably. Okay, if the market is touching 22,000 today itself, then we can definitely bring everything over to 20,500. But if not, the market is not touching 22,000 today, then we should ideally wait and watch. So here we are, and we will just open this up wide, and we'll wait and we'll observe when it's touching 20,000, and then we'll decide. Okay? Thank you.
Hello guys, welcome back. So today, as you can see, is Monday 19th of February and this is 9:31 a.m. Market opened slightly gap up and then it started falling down. Here we can see all the US markets were down. I am not sure the reason for opening the gap up. Probably due to HDFC Bank news. What we can here do is basically we can reduce some of the risk from our positions. So here basically at 20,200 PE, which we can do is just go ahead and exit this, and we can exit this 100 lots at 27.6, and we can buy. Yes, executed. And let's just adjust the position. What we can see is here, this has come inside one sigma, and what we'll have to do is probably just go ahead and buy something in 22,500, right? So 22,500 is the CE that you would probably have to buy one lot. And if we go and check for March, the CE of 22,500, here is the CE clear. We have to keep this one lot buy. That is extremely expensive. Okay, this PE is itself very expensive. Let's look at the daily chart. So here is your break even until March. Okay, mid March. So mid March, end of March, basically here. We're expecting the market will be here by end of March. This will be the trajectory. Okay, so I think this is highly unlikely. This is a one sigma movement. But at the same time, the market fall will come. This looks unlikely. What we can do is come to 20,500. What we can do is exit this all. Okay, we go ahead and exit it. Now what we can do is we have lots of margin left, 1 lakh only, not much. So what we can do is just go ahead and add 200 lots here, and 43.25. Check out the margins. Yes, margins are decent. Add, not add. We go to order and just modify it. Will be at 43.1. It might get sold. So we have it average price of 53. The average price of 53, 8 lots. 53, modify, and this is gone out. Here we'll have to adjust the wicks, okay, effectively. Now what we can see is this region is still inside the 1 sigma movement. Let's reload once. Okay, so we exited the wrong leg actually over here. 23,200 2200 CE is still in the game. 22,300 is a 62 option. 22,000, 23,200, 23,200 CE still sold. What we'll do, we'll just go ahead and first let's just go ahead and buy here. Okay, this is supposed to, we are supposed to buy this. Okay, here it is executed. 22,500 is executed. It's not showing actual price. Positions. Okay, actual average price 302. 22,500 CE. We'll just go ahead and buy March. 22,500. The CE is bought, and here we have added the position, and this is what it looks like. Okay, so not much of an impact, as we can see. The check out the margins are decent. We can do is we can add this one lot. We can do is we can go two lots over here at 22,500, and one lot we can add over here. So here we just go ahead and buy another lot. Okay, positions, and what's happening over here? Modify 0.7. Let's see. Let's modify 302, and let's just check. It's not getting executed. Orders. Yes, it is executed. Let's check the positions. Active price is not shown. No worries, we'll just sell this. Yes, now let's check the margins are decent, and look at the positions. This is 69.49, 303. Just make it 2, and here 69, 9.50. Modify, save strategy, save. Okay, now here you can see as we have managed to take this thing out a little bit, and at the expense of this reducing this flat profit. But for now, this position looks like manageable.
Monday, 19th of February. 19th of February, we are at 12:25 p.m. and the market is going upward non-stop along with rising India VIX. This gives an opportunity to add more puts over here. So what we'll do, we'll just make a 100 put. Okay, we'll sell this of put. Yes, the put has been sold. This is 50.66. Here's the margin, and let's just add the 50.66 PE. Make it 50. We have saved the strategy. Here it's gone. Now as the market goes up, suppose it will land around 23,000 levels. Okay, 1,000 above our 22,000 level, so we will get the max profit. But unfortunately, if it goes any higher, then here is exactly where we'll start seeing some losses. So what we'll have to do, we'll have to probably book all the put sides, and maybe we'll have to go long in futures. Only time will tell what we have to do over here. For now, this is the strategy, and let's just save it. We can go ahead further because the VIX is rising. India VIX is rising, and the India VIX will keep on rising, I believe, from now on. I see some weakness over here. The market can come down. Even if it comes down, I think we'll be good to go. So here we have booked around 5k, and our PNL is minus 18k. So again, that is a really bad situation. Okay, booking 5k and giving off minus 18k. But that is the what happens when we are doing options trading in a rising VIX. Although the theta per day is decent, we are going around 6,000, so 6 3s are 18. If 3 days we get a good market does not fluctuate or lands back on its position, we are going to get some profit out of it. We will probably get of the same 5,000 that we have. So that's it for now. Okay, I'm sorry, that's it for now. So let's wait and watch how the market goes. So here at 12:45 we are not able to see any stopping in the market. So what I've done is basically I've added another 100 lots, okay, with the margins 51,000, and if I check the orders, try to order another 100 lots. You can modify this and make it okay, there's no need for modification. Now let's just check the positions. Here I don't know what is the average. I can just check the average from here. Some problem, technical glitch. Check out the positions. So we have this 200 lots. Here we have the 200 lots. We have only 400 lots in the negative selling and the negative territory. Now let's just update this. We can check the orders. Okay, we can check. We have bought at 352 and we had earlier bought at 302. So it's overall 325 and we can go and buy it at 325. 25 modify. So here as you can see, now if the market goes up we will incur some profits, okay, and if the market goes down we will incur only 11,000 profit. So this is the unfortunate scenario of adjustments, and here our VIX has become effectively 15.7 and we are currently sitting at around 20k of losses. So what we could achieve here is only around 20, from 23,000 we could actually increase our break evens to around 23,400 levels. So if the market shoots up above 22,500, we will probably have to go in for another adjustments and probably bring this puts to 21,000 PE. That would be our next move. But for now, we'll stay put over here, just for handling the market fluctuations. So we'll let this margins be over there. What we can do is we can probably increase the risk from lower end. So 20,500 is a good value. 21,000 also looks decent, but what we'll do, we'll increase the puts from here. Can add more. We can go and add 100 lots over here, and that's it. And now let's check out the margins. Yes, 1,43,000, and if we check out the positions, here it is 49. So that's what we'll get, 49 of PE. Add a couple of lots, go ahead with 49, modify, and we save the strategy. That's it. So this is the perfect adjustment now. We are around 15,000 profit and we've already booked 5,000. So if we close this month over here somewhere around this levels, we'll have to check. So this is for the 2 months, so we should at least had around 35,000 profits over here. Unfortunately that is not the scenario. What we can do is we can actually start buying some PE at the bottommost side and then decide pushing forward. So if we go ahead and buy the 20,000 PE, let's check out the levels of 20,000 PE in March, and here is the 20,000 PE of March. We clear this out, and what we can get is 20,000 US 21 levels. So it would take away half of your premium straight away. Okay, if it takes away half of your premium, you should be at least be able to double this or triple this or make this like 1,500 quantity. I don't think that will be a possibility of making this a 1500 possible quantity. So we'll just let these things go. Okay, we'll just wait and watch and how the market is changing, and based on that we'll do some reactions. For now we have kept it comfortably. Hello guys, welcome back. So we are sitting on 20th of February, Tuesday. This is 12:28 p.m. and we can see this is a very good candle going on over here, and you can see the market opened slightly gap down, then it's trying to sustain. I think second half it will come down, but what I'll do, I'll have to move my PE to 21,000, so we'll be moving it at this point. But I think by March also if it comes down, it looks very difficult that it will come down straight away like this. So that is the reason, though anything can happen in the market, but I still feel strongly that it will come down slowly. So the move over here is basically just go ahead and buy the 500 lots here, 500 lots of buying, and this is 21.5, and we go to positions. Here we go ahead and exit. So I had exited 100 lot, now I'll go and exit other lots as well. So this is 39.3, I just exited this point, and we'll reload once just to check if it is coming out. Okay, now here what we can see is basically 21.50. Okay, let's check out the market depth. Market depth is 21.6. So what we'll do, it basically 21.7 will go at 21.7. We'll modify this. Yes, it's executed. Now what we can do is basically, if we check out the margins, there's not much of a margins left. Now what we can do is basically can modify it for 39.5 or 6, and I think this will get triggered completely. Here's the data. Okay, 39.6. Okay, we have achieved it. Now let's check the margins. Margins are decent. 3 lakhs margin, 500. Here let's see if we can sell the 500 quantity, and we go ahead and sell a 500 quantity. Hopefully this should get exited. Yeah, okay, this got triggered, and let's check out the margins, pending margins. Here are the pending margins. Okay, 72,000, decent enough for us. Let's check out the positions, and we can now cancel out the 20,500, 20,200 PE. These two are cancelled out. 22,000 CE. I'm not sure why this is here. 22,000 CE, no need 22,000 CE for now. Okay, so these are the active. 23,000 CE is the active one. Now let's check these two. This is 21.7 and 78.75. So we'll go ahead and adjust over here. Let's go for PE. Here there are 3 legs of C, and we'll do 2 legs of PE. So the cell leg here, and this is 10 lots, 78 modify. Okay, now we can just go ahead and do the options, and here you can see there is 58,000 profit, but we'll also buy, so which will cause a loss of probably some values. 10 lots we add a position, and we save the strategy. 0.9. Here you can see 47,000 profit only. Okay, so this is what we have saved, a new strategy. This is how it will look like. Okay, the margin consumption here is around 11 lakhs, and that is fine. So 1 2 3 4 5 leg strategy. So that's it for now. Thank you.
Tuesday, and we are shooting this after a long time. So now it is 9:55 a.m. Here we could see there was a slight gap down, then the markets recovered, and now it's again showing some rejections. And if you check the daily chart, so the market is here. Now let's look at a strategy. The 200 sold call is coming in profit, and look at the graph. Here what I feel, I can bring this 200 sold CE inside, That's what I feel. So what we'll do, we'll probably go ahead and book this and exit it. So we'll go ahead and exit. Actually, I've already put this order over here, so I'll check the order. Here is the order. I'll just modify this order for 64. Okay, now I can sell this at 103, so I'll just go ahead and sell this 100 lots over here and look how things turn out. What we can do, we can actually increase this PE as well if it permits. Let's just check the order. It's not getting executed. This went again to 65. At 65 also, this is not getting executed. PE is rising 65.15. Not sure why PE is rising. I think the market is coming downwards. No. And why is PE rising? So if we go for 5 minutes, okay, the 5 minute chart, it came slightly, it came down from this peak, and now it's trying to go down, and that is why the PE is rising. But still, we are the best buyer. Yes, so most of it is executed. What we can do now is this one we can book it. Okay, it's gone, and here we'll sell some extra. What about 100 lots? How does this work? If we just increase this, okay, so let's just make this 100 lots, and let's see, we add it 100 lots. Okay, 104.75, we sell it. So I think we should exit this. I'll just modify in proper position. I think this is exited only. I'll just reload. Orders. Okay, still showing pending. We'll just modify 65.5 and we'll just close this case. And the selling item, I think it is coming down. Okay, that is already executed. Sell item. Not sure why this is causing problem. Okay, let's just close at 66 and get done with it. Okay, it is closed. Sorry. So this is at 96 now. Here we have 96. Modify. So this strategy. 2.9 VIX is 15.9, I think. 15.8. That's fine. Here the peak profit that we'll get here is around 1 lakh, but what we'll get the realistic profit over here is 6,000. I mean, that's fine. And as soon as the market goes over 22,500, we'll start getting some profits. Okay, so not an issue. What we can do probably over here is, exit this, buy like this is already 349. So we have bought at a very expensive value and we're already taking 16,000, giving a loss of 16,000 already, and our upper break even is 23,355. So do you really think this will go 23,355 in next 1 month? Seems highly unlikely. So if we just go ahead and check the 1 minute, 1 week chart, 1 minute, 1 month chart. Okay, so 23,300 is highly unlikely in 1 month. But we cannot see anything. You can see this candle. This goes from, and we're at 10:01 a.m. Okay, this is executed. Margins are decent, and we can exit this. So the bot value has come down, and we save the strategy. Now this is fine. We have some earning potential here. So that's it for this video. Thank you so much.
and 1 day short of expiry. This is 10:55 a.m. and as we can see there is one red candle over here, and the India VIX is already rising, and I'm really not sure where will it go and drop. Okay, now we are here with the strategy, and what we can do is probably just go ahead and book this profit, and maybe push back a little bit from here. So it's 21,000. So I'm looking at 21,000 for, let's look at 21,000 where it goes. PE, we check for March, and here is a Nifty PE 21,000, and we check for March. Okay, so here we can add this, we add this, and then we add this. Okay, four values we have added. Here you can see 21,000 is 54. Okay, and then we have 36, 19, and 6. So for 1 week we'll have 6 rupees, and 6 to the 12, and 19 to the 38. 19 is very higher, 36 into 2, so the amount is not doubling every week. So here you can see from the this week the amount is more than double, but here the amount is not more than double, and even here the amount is not more than double. Even here you can see the same thing. So what we'll do, and I don't think this will come down to like 24 levels. Okay, what we can do probably over here is here if you can see in middle of the month is less than half of this. Okay, so that's the issue. So here what we can see, the monthly options have a higher premium, so there is no point of moving this strategy. So this is just a explanation here, because the monthly option is very having a very, will have around 20 rupees extra for the last week. So I don't think there is any adjustment left over here. So what we'll do, we'll just wait and watch, and let's see how the market goes and then decide. Hello everyone, welcome back to my YouTube channel. So today is Friday, and this is 1st of March, 10:19 a.m. The market is rising up. Let's check out the adjustments and what we can do over here. We see the strategy here. I think we can go ahead and do some probably puts, or we can go ahead and buy this one extra lot of call. So what we'll do, we'll probably buy this 22,500 at 239. Okay, we'll just buy this, and it is executed. So here are the positions, and 310 is the buying rate. This is how the strategy looks like. Overall India VIX is 15.1, so our effective VIX will maybe come down to 15.8 at max. Here we have a peak profit of 1 lakh, and that would just be amazing if we get that peak profit. Check out the Greeks, and the Greeks 4000 decay. I added 150, I'm sorry, a 50 quantity, basically a one lot yesterday at around 60, but unfortunately it didn't give me much profit, and I could not exit it today when the market rose early in the morning. Here we can see now the market is trying to stabilize and come down, and let's look at the major trend, the monthly trend. Here you can see it is upwards, and there is a support line which the market is respecting. So here all the months are respecting this support line. This was a good flattish period, these 4 months, July to December 2023, and now we are rising over here. Let's look at the daily chart. Here is the daily chart, and even here, yes, these are the market conditions. I created this blue line based on my break evens, and let's check the break evens. 23,272. Okay, the break even has increased slightly, not much. Maybe we'll come here. Okay, so this is for March month. This is the break even, and if you see the percentage rise, so from this current levels, it should be around 4% rise. So at 4% rise, 4-5% rise, I'll achieve the break even. And then situations will get really murky. The market goes in this 4-5% in one direction, because actually if you can see from around quite some time, the market is just 4% between Jan to March. So if it just happens in 1 month, it's going to be challenging. For now, we will go ahead and check the PNL. So it's time to check out the PNL. So here, if we go ahead and check, and we go to the back office, we go to the reports. So I'm the only person, I think, who is showing you the correct PNL. Okay, you'll get only truth and nothing, no falsehood. This is the correct and my absolute PNL. And I'll go to FNO. Okay, you see here I have 8,000 profit, 8,085. So we'll just go ahead and mention that profit of 8085. It will just first drag this down. Okay, and then I'll mention 8085 and take this this and this. Okay, so here we are in green. Now we have achieved 8,000 profit, but the percentage is basically D6 by C6. Okay, so it is D8 by C8. I'm not sure why this percentage is less. Maybe it will show better over here. Okay, we have to change the formatting. Yes, now it's correct. So we are only 0.81% profit on the margin of 10 lakh. Also I had to pump in 1 lakh, and then I also removed that 1 lakh in between. We still had a shortfall of 11,000, and here if you can see D2 minus G2, the total profit is here. And if you see the expected profit is still falling short. So our expected profit is 1,20,000 and our actual profit is 634. Okay, so we have actually achieved almost break even and nothing extra. So from overall the September, October, November, December, January, okay, we've done so much of efforts and only achieved break even, and let's hope March is a good month. So we'll observe, we'll take lower risks and try to observe how the market goes.